The great thing about conventional loan is that it's predictable, but there's a caveat to it. You have to understand what PITI is. PITI is P for principal, I for interest, T for tax, and I for insurance. PITI. Now keep in mind, whenever you buy a property, the bank is going to say, if you're putting 20% down, you have an option to include escrow as part of your monthly payment. So your monthly payment is supposed to be PITI, like I said, right? Principal, interest, tax, and insurance. That's what's going to cover your monthly payment, right? But if you put 20% down, the bank is going to give you an option to pay your tax or your insurance at the end of the year by yourself. So that's an option to lower your monthly payment. So if PITI for a property of 600K is, let's say, $3,000, let's say $1,200 of that is for your tax and insurance. Does that make sense? So $1,800 is going to be what your monthly payment is, principal and interest. And the bank is going to say, because you put 20% down, you have an option to pay the $1,200, which is tax and insurance, at the end of the year for yourself. Some people might say, you know what, I want to pay all together the $3,000 all at once every single month. And the reason why is because I don't want to deal with it with having to pay the tax at the end of the year by myself. Perfectly fine. But some other people might say, I don't want to have to deal with that high pressure of $3,000 a month. So I'm going to stick to the $1,800 and then pay the tax at the end of the year by myself. So you have that option to pay escrow as part of your monthly payment or not. So just keep that in mind. But that being said, the reason why I pointed out the escrow is because the value of your property, that's the plan. We want it to appreciate over time. And the tax assessed on your property is going to change over time. So if your property is worth 600K, the tax you're going to pay on the 600K is going to be completely different than if your property goes up in value up to $1 million. Does that make sense? So your payment is going to slightly change because the increase in value of your property. So it's always good to keep that in mind. The payment when it comes to conventional loans are usually fixed, but because of the tax, if you selected escrow, meaning if you told the bank, I'll pay everything at once with you guys, the $3,000 and everything every month, your payment is going to slightly change because your tax and your insurance is going to change every single year. But if you opt out of the escrow, your payment will always stay the same because your principal and your interest is always going to be the same that you're supposed to pay for them. Does that make sense? And then your tax and insurance, you're going to pay on your own later on. Hopefully that makes sense. Basically, to sum it up again, let me repeat myself. If you buy a property and you put 20% down, you have the option to opt out of escrow.